Here are 5 tricks to use home equity to build wealth in 2026. So first of all, home equity is super powerful. It's nice whether a home is paid off or fully leveraged and has a mortgage, at 100% financing, it doesn't matter. Equity can be built in 2 different ways. One is through appreciation. It doesn't matter if you have a mortgage or not. And two, you can build equity by paying down a mortgage. So in that case, it does matter, right? So the difference between the market value and the mortgage balance is your equity. So let's just use easy math. If it's a home's worth 100 grand and it's paid off free and clear, the equity is 100 grand. If somebody owes $80,000 on that $100,000 mortgage, the equity, the home equity in that home is $20,000. The difference between the value and the mortgage balance. Now, over time, if balance grows, or pardon me, balance goes down and the appreciation, the home's value grows, you get more home equity. And that's how you build wealth in 2026, right? Many homeowners are unaware of the potential that home equity can actually present to you. Not just a fact that, yes, on a piece of paper, you're worth, air quotes, worth more, because you are. Your net worth increases as that equity goes up. But there's things you can do with that home equity that might help you in terms of just improving your overall financial well-being. So 5 tricks to use home equity to build wealth in 2026, right? We'll go over those together. And some of it we will talk about refinancing. Not that this video is about refinancing, but that is one part that can be used later on. So we're going to talk about as value increases, the accessibility, the access to that equity, and just kind of the financial tools you can use for it to help maybe offset and offset some debts and maybe improve your life. So trick number one, right? So the 5 tricks to use home equity to build wealth in 2026. Trick one, right? Home equity loans, right? Those HELOCs and their 4 real estate investments. So, for example, home equity loans in general, what does that mean? It means somebody can go in and actually tap the equity of their home. It doesn't mean they have to pull out, all the money, but they can actually tap that equity. And so they can get access to that cash and they can use that if you're a home investor to buy other investment properties. They can use that to pay off debts. They can use it to do all kinds of things, but that is tax-free money. It's not income because it's your equity. This is your money. Your home appreciated and the balance has been paid down on the mortgage. That equity is yours to access. And things like home equity line of credits, the HELOCs, that's how you say it. It's an acronym, HELOC, HELOC, home equity line of credit. That allows like a credit card, essentially that's kind of tied to your house or to that equity line. And it allows you to go get the money when you need it. But if there's no balance, there's no payment. So it's really, really cool. And you can do these. We do offer HELOCs, which is not normal. We do offer those type of line of credits on an actual investment property or vacation home. Most institutions won't. We can, but it's like a credit card. So no balance, no payment. Sweet. But if you do need access to those funds, whether it's, like I said, to use for paying down debt or just having that emergency fund or to go make some other investments, you do have that access to that and access to that capital. It's very flexible and allows you to figure out what you need to do. So that is number one trick. Number two, so the 5 tricks to use home equity to build your wealth in 2026. Number two is you can use it for home improvements to boost the property value, right? And so they need to be done strategically, right? Just going in there and slapping paint on the wall and putting a whole bunch of landscaping in and a gold-plated toilet, that doesn't really help your value. Where you need to do is spend your money and do it in the strategic way where you get the highest ROI. Some of the most obvious known are the kitchen remodels, the bathroom updates, maybe making some energy efficient upgrades. Believe it or not, I know we did a blog just a little bit ago on these about the highest ROI garage doors. I had no idea. It's like a 200 and I can't remember exactly, but it's like 200+% ROI on your money. Because again, a lot of that is the marketability of a home, but it actually does increase value. That part blew me away. So the part I would say as far as home improvements, right? Figure out what's needed and what's wanted. Kind of set your budget for both. I need this. I want that. Get the estimates, set the budget, consider, don't over improve what's normal for your area, what's normal for that market. I would get an opinion from a professional realtor or appraiser, and then kind of figure out what you want to do for repayment strategy, and then look at it from just all kinds of, whether it's the mortgage stuff, if there's tax implications, all those things. But absolutely, the number two way to build equity in your home is through those home improvements to boost that value. All right, so number three, right? And the total 5 tricks to use home equity to build wealth in 2026. And number three is doing a full-blown refinancing to unlock your equity. And you can use this to diversify your investments or to pay off cash. So cash out refinancing, like we talked about earlier with like HELOCs and line of credits, this is full-blown just new mortgage, getting the cash out. Usually it's bigger dollar amounts. People say, man, I just need a bunch, whereas home equities might be smaller. And so with the cash out refinance, it might just be, man, I need to do this. So it replaces your existing loan, right? So your loan balance will increase. You're going to borrow to where it increases what you owe. So it reduces the equity in your home, but it puts more money in your bank account, gives you access to those funds, right? And you can use that for, like I said, paying off debts, use it for investing. I don't recommend going to Vegas with it. But certainly if it's something that you want to use to buy other real estate, to rental properties, again, could you throw it in the stock market? Sure. I don't know that I'd advocate that, but you could. Could it help, pay for tuition for school as opposed to, or maybe a new car? And again, that's where you just got to run the numbers to see what makes sense for you. You got to evaluate the interest rates for what you're paying on that mortgage versus other opportunities. Certainly I would absolutely recommend consult with your financial advisor, your CPA, do all those things. But I think that's really important. So the number 4, right? So that was refinancing. Number 4, and this kind of, we've alluded to it 2 or 3 times already, but this is truly the strategy that is why cash outs are still so prevalent. But it's the number 4 trick to use home equity to build wealth in 2026 is to consolidate debt. So people use home equity to consolidate debt. Credit cards are at an all-time high. It's over $1 trillion in this company or in this country. Crazy. So if you can borrow, and yes, I understand folks have those 3% and 4% mortgages from COVID. Those are awesome. And I don't love refinancing those. I don't. I wish we didn't have to. But the reality is, if somebody's paying 22 and 25% on these credit cards, so or these massive payments on their cars, like the average car payment now is over $1,000, which is nuts. So if somebody can do that, use that home equity to consolidate those debts, sometimes just because the rate, you replace the 3% to 6% isn't always fun, but to consolidate all that into one payment and improve their cash flow, then they can start tackling the mortgage if that's what they want to do. But ultimately, it lowers their monthly payment. It can absolutely simplify their finances. And the byproduct of that is maybe it improves their credit scores as well. But really, it's just all about giving them a reset button so that they can then reestablish where they are and have maintain responsible spending after that. It's not meant to say get home equity just to do it again a couple of years later. No, do it, push reset, get a plan, and execute. So the last thing on the 5 tricks to use home equity to build wealth in 2026, trick number 5. You can use that equity to build passive income streams. So what does that mean? I've alluded to it before, but I want to be very clear on this one. I'm not saying this is for everybody, but it can be done, and we use it quite often with folks, especially those investors. They use it to buy rental properties. They leverage home equity loans to basically finance their next purchase. This isn't something that gets done every single year, but if somebody buys a home or has a rental property, existing rental property, and they have that equity in that home, they'll then tap that equity to then use that for the down payment on their next house. And then the cash flow that comes from both those properties, they can pay back and build that equity up again really, really fast. But those rental incomes can help not just cover the mortgage, but also, like I said, pay down that balance. And over time, as those properties, instead of having one property appreciating, they now have 2. And so as those properties appreciate, the balances get driven down based on paying those things, creates a little steady cash flow. They get some write-offs for taxes, so tax benefits, they get the equity growing. And they ultimately then have the ability to say over the time, 2 properties can become 3, 3 become 4. I personally did this. Caroline and I had up to 16 rental properties at one point in time, and it was awesome. Towards the end, it was 2003, I want to say, so a little post-COVID towards the end. We did start selling them off, a lot of them, because it just made sense. So again, I can tell you I've done this personally, and having that financial safety net of having that equity in there and having those credit lines for emergencies, it is huge. So a couple lessons I did learn, right, in doing this. So yes, we're talking about maximizing your home equity for long-term growth, but the reality is a couple things to avoid is don't get over leveraged. yes, we as a mortgage industry are going to have some caveats in there that won't let you get too much. But the reality is, you got to look at your situation. Man, we got lucky in 2018. Tornadoes, unfortunately, came through and hit six of our properties here in Dallas. That sucked. We weren't necessarily over leveraged, but we didn't have enough. I mean, we did. We got lucky, barely had enough cash reserves. You think, well, insurance covers a lot. Well, yeah, but now you don't have rents coming in because some of them were vacant. You do have to pay deductibles. I think it was like 10 to 20 grand for each one of those. So don't get over leveraged. Make sure you got cash reserves. Understand just the volatility in the market. Dallas Fort Worth has been historically very safe, but there's, the sand states. You can say, man, I got a ton of equity. Well, if the market turns and all of a sudden you don't, that equity doesn't, you can't access it. You got a problem. Your interest rates, take into consideration your cost of borrowing. Those are things that, again, not just for the mortgage, but in general life. Those are things to think about for key risk. And, to mitigate that, like I said, you get a financial plan, consult with people, mortgage professionals, certainly, your tax advisor, your financial planner, consult with your advisors, monitor your investments, both real estate and others, just to make sure you are prepared for anything that comes along. So again, to maximize your home equity for long-term wealth, right? Stay up to date with your market, make sure you have enough cash in the bank, make sure that when there's opportunity to do something, you can. And just make sure that you are running a diversified investment portfolio. I got too heavy in real estate. When I had the 16 rental properties, like all my net worth was in there. And that's kind of like, oh, I probably should do things. So now it's some in real estate and some in other things. But just make sure you got your long-term goals and absolutely consult an expert, right? So we're here, and this is, if you're watching this and you're still watching this, these are really good tips that I absolutely believe in and recommend and I live by, but everybody's going to be unique and everybody's going to be different. So for these 5 tricks to use the home equity to build wealth in 2026, just make sure that you're leveraging your home equity appropriately when you need to for the right reasons, right? They're powerful wealth building tools, but just be careful and just make sure that you're doing it for the right reasons. So if you do need us or want to reach out to us, mortgagemark.com is the best way to get us. And certainly if we can be of service to you, we'd love to. And as always, when you think mortgage, think Mark.